Welcome everybody to a July 12th, 2020 gold analysis and breakdown video. We're gonna do a quick analysis and breakdown on gold in this video. Past few weeks I've done it. It's been pretty good, and I guess this past week gold just shot up like a rocket ship. It was pretty intense, but it created new levels to look at, new key levels, supports, resistances, what to look for, etc. So we'll go over all that, as well as looking at the news coming up for the week, seeing if there's any high volume news or anything that could affect the price of gold. But yeah, other than that, let's get started. So let's go to the gold chart. Oh, we also have Kyle Chan here.
Oh, hey guys, sorry.
Hi.
I'm incognito right now.
It's incognito, but he's on a gold analysis because we have a few videos we're gonna pump out today.
Yeah.
So let's get started. Gold, top down, monthly, bullish move up. It's pretty intense, but as you can see, like after it's slowing down a little bit. After like a few bullish months up, it does have like a retracement. This is a trade war, so even after the trade war, it had a few months to slow down, and then I guess before summer last year, it had the push up and then the slowdown. So I'm expecting this month kind of do the same, kind of have a slowdown, and then when it rolls into August, September, kind of have a sell off and a pullback before continuing higher. But it's still early in July, so we gotta play the month of July and what we see. Weekly, as you can see, is completely bullish. There's no indication to sell. Like the safest sells below 1770, below the previous wick of last week, to test back into this lower range levels, which I have on my other chart. Let's check that quickly. Yeah, it's kind of messy because there's levels going down, but other than that, it's pretty bullish. We could see another bullish candle to start the next week before it's off. But if you go to the daily, this is why we go top down. We kind of break it from higher to lower. Daily, you have a lower wick from the highs, and over here you have a lower wick from the previous day's candle too. If it breaks, let's say July 8th daily, then it'll probably go down. But just considering how the weekly looks, could see a bullish open to continue its bullish momentum upwards. Safest buy is going to be above the previous day's high. You can play the intraday range again between levels that we have marked down that I'll explain in a bit. Also depending on the high volume news. So when we go to 4 hour, you can see has defined pretty good levels. So you have 1796 is a pretty solid level, and then you got 1804, 1807, 1813. So you have like these intraday levels which can get you like 20-30 pips, and then hold a runner potentially if it breaks. Then when you go to the hour, you can see the hourly has been on a straight uptrend. This is one thing I was looking at when I was trading gold last week, is like it's just uptrend. And then if you draw the upper channel, it's like in this channel going up. So that's the one thing I was expecting, just considering the higher time frames is bullish. We're kind of at the lower end of this channel, so you can see a little move down to like 1796 area and then continuing upwards. But I'll draw all these out on the chart when I get there. The 30, 15, and the 5, those are the three time frames I really use for like trading and entries. I usually base trades off 1 hour too for continued momentum, like if I work the short, maybe the break of the previous hour and then continue momentum to the levels. But the entry points are the 30, 15, and 5. You don't really have to do analysis on those. So let's get to the levels and what I'm looking for.
Hell yeah, let's do it.
Yeah, let's do it. Monthly, I mean, there is no levels. Like, it's hard to say considering maybe 18 where it stopped at 1813. That was the level from way back here. The body is at 1826 of post 08 crisis in August and September 2011, with the wicks being at 1920. You're gonna get a move up, and I think it's gonna go 2500 because gold moves in waves. So if you look what I mean by gold moves in waves, if you go to the .com area, go wick to wick, you have a 50% retracement. So you have this move up and then a 50% retracement. So you might get another move up similar to this and then get another retracement test back there. But I think that level was 2500, 2600 from last week's video that I did. That's going to be long term. And then when we go to intraday or lower time frames, weekly, still bullish, higher high, higher low, expecting this to continue upwards. Daily had a little pullback, which is nice. It's healthy for a trend to have a pullback. 4 hour, yeah, same thing. Nice little pullback. Still the channel's upwards. So when we go to the hour and what I'm looking for, got to do a quick analysis on it. Actually, wait, let's go to the news first. I have it all here. Monday, nothing really. No big news. Tuesday, nothing. CPI, I guess, 630. Tuesday, that should move it quite a bit. Depending how it goes. Oh, damn, CAD has their news. Interest rate at 8 a.m. Wednesday. That'll be a
Oh,
good
that's
one.
gonna be fun.
That's gonna be fun too. And then you have damn core retail sales, hey? We'll see how that goes because I think the riots were in June, right? Where they were just busting into stores. Yeah, I
Isn't that
guess
45 days? They post that for the
45.
core retail sales.
Released 13 days after the month ends. I think it's a month over month. Yeah, it's a month over month kind of indicator. But we'll see about that. Philly Fed Manufacturing Index. It's pretty bad, but unemployment claims, these have gone a lot better, but there's still a lot of unemployed people. So Thursday is a pretty big news day, and I think it's gonna set up for Thursday, or even like factor in the news to its price. But there's quite a bit of events Tuesday and Thursday. Monday might be a slower day. Monday might just have like a little retest and then go up. But we'll see. I am still bullish on this, and let's draw it out. So what I'm expecting, it's still in a bullish channel upwards. If I had to draw it before this big bull run up, kind of have that in a sense. Whoops. So it's bouncing off all these levels on its uptrend upwards. You get these higher. So you have the low point here. And then as you can see, the market structure has just been higher highs, higher lows, all the way up. So at this point right here, I think we're at like an inflection point. And especially considering the weekly is bullish, we're at kind of an inflection point here. You could see a retest here, but knowing gold, it could easily retest down here too before going up. Because as you can see, that was the previous level before it broke out. I think that was 1788 area. So if you see a retest at 1788, so right now, if you do even at the 1796, that's a pretty good one, or this level down here. You could see a retest here or a retest 1788. Any of these levels you see a retest, kind of like consolidation or like a candlestick creates a wick before going up, then that's a good indication to buy. Just considering it's still in a bullish trend too. The sells are not defined unless levels clearly break on high volume. So you would need certain levels to break on high volume, whether that is going to be 1792 over here. 1796, 1788. You could even play sells between levels, which is what I will draw out to. But what I'm expecting is this is basically this whole area right here is the wick for the weekly right now, for the previous week. I'm expecting that to get filled, and then anything above here is going to be easy buys. And I think I said 1826 was the level of the bodies. So maybe to 1826. That's still a 100 pip move. That's as safe as buys up there. So let me draw it out. So what I'm expecting is if you get a retest to certain levels, I'm going to put a retest here. And what did the week open up at last week? I want to put that down. July 6, 7, 8. So the week opened up right here, hey? So it has to respect here. I think the sells are going to be below 1774. So below the weekly wick open. Weekly open of last week. That's going to be the safest sells if it breaks below this level. But if it kind of tests these levels, and knowing gold, it could go to lower levels to create the lower weekly wick before popping up. So if you get kind of retest at these levels, I'm gonna move this arrow a little bit here. The 1774 level is the big one because that was when the last week candlestick opened. So if you get kind of these retests at these levels, create a support at any of these points, then you would want to see a move upwards after to test certain levels, whether it be here. This is going to be the weekly wick fill over here, and then continue upwards. And from this price too, just knowing how gold reacts, you could see a move up to start the week, because that's what happened at the start of last week. You kind of had this quick liquidity grab, and it wasn't even that big of a liquidity grab. If I had to draw a ruler out, when it opened, it went to the highs of 1775 area. So liquidity grab was only about $5 or $6, about 60 pips. So you could see the same thing here. You could see a move even to this kind of level at 1792. I'm gonna make this a pink line because it's not the strongest level I have, but it could hold. And if you do see a level, or if you see price reaction or price action kind of hit this level and continue higher, that would be a good indication for buys. Because I think at that point too, when I was drawing that uptrend channel, that was the area where the lower end of the channel was. I'm actually going to redo that right here. And then the sells are going to be below this area. The sells below 1774 is going to be the break of the previous week. And I think you could just play between levels on the sells. Sells are going to be, in my opinion, short term, just considering market fear and coronavirus here. This is a lot of fundamentals that go into sells. Well, I mean, if there's market optimism, if there's market optimism there, you're going to see room for sales. The stock market in itself is making new highs right now, which is pretty insane, in my opinion. I didn't expect that.
Oh, buddy, man. I think the markets are going to double by now.
Double?
Double. Anything is possible, especially when the Fed's freaking helping out.
Yeah,
honestly.
exactly.
Like if you have a player in the market that has actually unlimited money in their bank accounts, yes, the stock market will go open.
Exactly,
and plus, honestly, one more thing, sorry to interrupt, guys, but mostly in finance, you discount a huge variable in discounting cash flows is using the interest rate. Interest rates are at all-time lows, so the discount factor is very low. That's why you have phenomenal growth. Just a simple like discount cash flow model. I'm just throwing it there. We'll make some videos and stuff regarding kind of more the intricacies of that if you guys are interested. But sorry to interrupt.
No, that was good.
I'm supposed to be incognito right now.
No, that was good. I kind of have to draw this out anyway. So.
So every time he has to draw something, I'll just be a filler.
Yeah. But no, it makes sense. The interest rate's low, borrowing's gonna be pretty low. Just in general, right?
Yeah.
There's gonna be more money out in the market because the Fed's printing more money.
Yeah.
And
People are gonna start, and the thing is too, people when interest rates are low, people start borrowing more because it's cheaper, and people save less because the amount of money that they put in interest savings accounts, they receive a lot less.
yeah, make
Either
sure.
they put it in the stock market, they wouldn't put it in the bond market for the fact that even if you put in corporate bonds, that is lower than they typically are pre 2008.
Yeah, I feel like the bond market's kind of drying up too right now with interest rates.
Oh, it's a zombie bond market. Not when feds are like, "Oh, I'll buy this and that."
I think Warren
It's
Buffett said
insane,
it
man.
best.
We're in a time that no one's ever seen before.
Oh, 100%. I think Warren Buffett said the best bond market was the best in the 80s because the interest rates were still high. So when the interest rates started going lower, that's when the bonds became more lucrative, and it's the value of bonds increased in itself. So let's have one big arrow here, kind of like that. So what I mean by all these arrows, actually, I'm gonna make this one arrow too, and this one's gonna be one arrow. All right, so let me get on this explanation. So what I mean by these arrows, so we could see just a bullish continue momentum up, and if it breaks 1800 to start the week, then you could see an easily bullish continue momentum up, especially to fill this weekly wick, which I said was going to be, this is the weekly wick right now, considering it opened down here and it closed over here, so technically down here is the weekly wick. You could see an easily price of gold fill this weekly wick, and if it breaks 1815, those are the safest buys to continue higher. So that's the first one. Safest buys above 1815, continue higher. If this arrow right here, if it just continues its bullish momentum, coronavirus goes up, economies slow down, etc. Because like right now, there's some states in the U.S. which are considering locking down again. So with another lockdown, what's going to happen? The economy crashes and people flock to safe havens, which is gold.
You heard about the Florida numbers?
Oh, new records every day.
Like 16,000 for today? Like that's,
I think like
that's dirt.
They're factoring in what happened Independence Day weekend with that coronavirus spreading party. So now you're getting new daily records every day. 73,000 yesterday for the whole country, 15,000 in Florida alone, which is intense. So with all that, and if there's fears of the economy shutting down, with those fundamentals and these technicals that gold is on an uptrend, you just see a bullish momentum continue upwards. 1792 is kind of like a level. It had a support over here. You can see that level before continuing upwards. 1788, I think it goes to 1788 because this was the high that kind of bounced around before it kind of had to break out upwards. But between these three, if you see consolidation and then breakout, get it on the breakout to be safe, have your stop below the level, get your 20 pips, hold the runner 2 levels, and kind of play it like that. And obviously you have lower levels too. These are kind of weaker levels down here. If it does start breaking lower, that's kind of when market optimism would come in. If the economy is growing, that's if the retail sales, the CPI is good, unemployment claims good, Philly Fed manufacturing index is good. So any positive news throughout the week, you could see a sell-off in gold. If all that is negative though, because it is on Tuesday, the first news for CPI, if that news is bad, you could see gold going up too. So yeah, no, just play between levels. The sells are really going to come. In my opinion, the safest sells are going to be below last week's candlestick. That's the safest sells. If you did want to play sells, you play sells between levels. You don't hold onto sells, because I tried to hold on to sells and I got killed. Well, even last week when I had that trade, remember I got the trade and I got out on the wick. That was that. What was that trade? Yeah, I had to sell last week and I got out on the wick before it continued its bullish move upwards. So Cells are gonna be played between levels. So I'm gonna write it down here actually. A few text blocks is. Let's have this one as news Tuesday 6:30 a.m. CPI Thursday 6:30 a.m. You have retail sales and employment claims. And then at 8:00 a.m. Philly Fed Manufacturing Index. So those are the big news events for the week. The text, or yeah, what I'm looking for here is I'm gonna put safest buys. Previous. $18.15. Safest buys there. Over here, we could see with market fear, new coronavirus. I'm gonna put COVID. So with market fear, COVID not slowing down, fears economy slowing down, or even going into lockdown again, could see investors flock into safe havens to start the week. And then here, if price opens and sells to grab liquidity, you could see a consolidation and then continued momentum upwards. Put the all the levels for price to have a consolidation, continued move upwards. So that's where these levels come into play. And then down here, I'm gonna put sells only played between levels. If price starts to break levels, get as gold is still and then the last one here is gonna be if there is positive news, COVID, vaccines, economies doing better, then you can see gold sell off. Factors as confluences confirm market optimism. There we go. So a quick overview of everything here. So you have the news events. News events are right here. Tuesday, CPI. Thursday, you have quite a bit of news. Safest buys above previous high, weekly highs, continue bullish momentum upwards, buys above 1815. With market fear, COVID not slowing down, fears of economy slowing down, or even going to lockdown again. You could see investors flocking to safe havens to start the week. So just start up and then continued upwards. If price opens and sells to grab liquidity, you can see consolidation and then continue momentum upwards. So you see kind of consolidation levels and continue momentum upwards. Follow the levels for price to have a consolidation and continue move upwards. So if it kind of reacts around these levels, and if it reacts, you see the momentum upwards. Sorry, give me a second. I'm gonna save this. Then sells only play between levels. So if it starts to sell like between 1792, 1788, kind of just between levels. Runners maybe run. I don't know. I don't like to have runners on the sells right now because it's kind of tough. Gold is still bullish. The only way I would hold my runner on a sell is if gold continues to start sell off, and only if we see market optimism and vaccinations come into play, then you could hold sells long terms between levels. But eventually, I guess next couple months, I do expect gold to kind of have sell off. But for now, in July, with coronavirus hitting new daily highs every day, you're gonna definitely see a bullish momentum upwards. So that's basically the breakdown for what I'm looking at this next week coming up. I mean, play within these levels and trade safe. Do not chase gold. Do not FOMO on gold. Gold gives opportunities every day. He gave opportunities every day last week too. So stay safe. Trade between these levels. If this analysis plays out, then it's exactly what I'll be following. But yeah, give a like on the stream. Subscribe if you enjoyed this breakdown on gold. Leave a comment, leave a like, give some feedback. We appreciate everything and anything that comes into play. But yeah, other than that, we'll be back in about 10 minutes with pairs breakdown, I guess, on the 4 pairs we're looking at. Chat will do a pretty detailed, in-depth breakdown on Euro USD, and I will do some on the other 3 pairs that we do trade. And yeah, well, I guess I'll do a Euro USD and Pound CAD, and then I'll do it on the other 2. I think it was Pound USD and USD CAD. So we'll do a breakdown on all of those. But yeah, thanks for tuning into this gold analysis. See you in a bit.